This is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Gaurav Chakravorty of qplum. Gaurav, thank you for joining us.
Thanks for having me.
Well, great. Can you tell us a little bit about how you got into the early stage world?
Yeah, sure. So I come from a computer science background, and I was doing a PhD in University of Pennsylvania at Philadelphia. And when I took a few courses at Wharton, and Dr. Steele, he made us understand how the very scientific stuff we were researching, how that can be used in finance, in trading, in portfolio management. And I joined a small company in New York, Tower Research Capital. They started me off with just $10,000. I was going to do something new, machine learning and stuff, and they didn't want to take too big a risk. But within a year, I turned that into about 70 million. And I was they made me partner of the firm. I was the youngest partner, and a lot of good things happened over the 5 years that I was there. I made about 700 million for the firm. Then I started my own company. Again, trading globally, again, just completely devoted to using machine learning in trading. And that really worked out well. And till 2015, that's all I was doing. But in 2015, I wanted to make a difference. I wanted to touch more lives with this. I wanted to change the world. So we started qplum. That's our mission, to bring science into investing.
Great. So tell us more about qplum and what you guys focus on in science and investing. Can you dive into that in more detail?
Sure. We have a very product-centric approach. At qplum, kind of a research lab, we are about 38 people, and 32 of them are engineers, and most are from computer science background. Essentially, what we are trying to do is build the highest possible quality product at the lowest fees. And doing these two together is the hard part. Now, our goals are, we work with two segments. One is the family office and high net worth individual segment. The other we work with in the pension fund space. Now, in the family office space, we have a digital platform where we ask investors to come and connect with us through an AI-driven chatbot, which tries to understand exactly what each investor is unique. We try to understand the uniqueness, what they're looking for, and build customized investment solutions for them. We don't ask them to move their money. We want to manage money where it is. We want to make it a painless process. So that's the digital investment strategy platform for family offices. And on the pension fund space, which we're seeing a lot of growth in, is we work with the chief investment office. And they want to do two things. They want to make the target 6%, and they don't want to lose money. But in doing this, they're facing a lot of pushback from the stakeholders because people don't want them to pay the 2 and 20 to external managers. So now we work with pension funds to come up with this dynamic asset allocation piece, which allows them to achieve this 2% alpha without costs of a hedge fund.
So qplum uses AI to reduce fees and increase transparency used by institutions and high net worth individuals. Can you talk a little bit more about where you guys are going with this? It sounds like this is a good first step, but what's the next step for you guys?
It's not so much about us. I mean, for a second, forget us. Think about the global asset management industry. $180 billion. $180 trillion is managed by the asset management industry. And investors pay more than $1.2 trillion in fees every year. Yet, nothing is getting solved every year, be it a pension fund or be it somebody investing their first savings. Every year we are having to start from scratch, ask the same old questions: how much stock, how much bonds, allocation, or whether buy Tesla, sell Tesla, whatever the questions are. We are still fairly clueless about it. It's like for my 4-month-old, if he has fever, if I have to just start medical research from scratch, that's not. Other disciplines are much more advanced. They are much more scientific. Yet in investing, we are having to start from scratch all the time. So the goal that we have at qplum, and we're working with some innovative family offices and pension funds who have similar goals, is to not look at investing as a competition. Is to not look at investing as it's a zero-sum game and I need to make more money than others. That's not our approach. Our approach is to make it a holistic, data-driven decision-making process. That means take all the parameters of my unique situation and feed it into this big, giant deep learning artificial intelligence process. And what comes out from that, test it across different scenarios. And that's what I meant by transparency. Show me exactly what will happen in different situations so that I know the investment strategy I have, as well as I know my iPhone, as well as I know my car or my Google Maps. I know them because I know that if I press this button, this is what will happen. Similarly, I should know my strategy in that level of transparency, that if this is the market, this is what will happen. So low fees and greater transparency.
So what are some of the challenges you're facing in developing out this platform? AI is new and emerging in this sector and space, and of course we're getting into very large dollar numbers here. But what do you find to be the big challenges you're facing?
It's the same thing that happens in every trading strategy. My boss used to say there are 3 stages of a trading strategy, and this is when we were just starting high frequency trading. The first stage is when nobody knows about it, and you talk to someone and they either dismiss it as like not relevant to them. In any conversation, they would say, "Yeah, this is futuristic. Let someone else try it before I even think about it." The next stage is where there's a huge ecosystem around it, and returns are not so great, but they're positive. And the last stage is when the strategy has really died out, and people are still piling money into it, just thinking that it will work like it used to 10 years ago. Let's call it the nobody knows about it stage. Second stage is, yeah, it works, but not as great. And third is it doesn't work anymore. So AI is clearly in the first stage. A lot of people are talking about AI, but frankly, almost nobody is using it. A pension fund investment officer once was joking to me recently. He was saying that when I speak to a hedge fund manager, he'll show me, this is your credit fund, this is my like stock allocation fund, et cetera. And then when I ask him, so do you guys look into AI and using AI methods? And the hedge fund manager will say, yeah, absolutely, we are totally on board in AI. And then he will shove his 25-year-old analyst in front of me to prove that he's doing some AI. That's the sort of stage we are in with AI.
So what are the trends coming up here? It seems like we're at the beginning phases, and I know in the early stage a lot of things are happening. But what are some of the key trends you're seeing in the use of AI and fintech right now?
It's very appropriate, the word used, fintech. And I want people to understand that a lot of people think fintech means just technology used in finance. That's not. Technology has been used in finance for many decades now. But the interesting part, or what's new in fintech, is that where technology is used in the revenue generating side of finance. Even 15 years ago, Citigroup had more technology people than they had traders. But the idea was traders make the money and technology is the cost. Today, in some parts of finance space, technology also makes the money. And now, if you want to build a fully systematic, like a technology piece to make money, then you will demand very high quality from it. That's where AI comes in. AI is not this Google demo making a phone call. AI is basically about the ability to take this multi-dimensional world that we have. There's so many inputs. You can't make normal distributions and et cetera, and like joint. You can't find out correlations. All that doesn't make sense for many inputs. So how do you capture this multi-dimensional input into your problem? Whether it's investing in early stage companies, whether it's investing your family office money towards goals of multi-generational goals. All these problems there's so many unknowns and so many variables. That's where AI comes in. And yes, we see a lot of happening in the AI and fintech space, But frankly, there's very little innovation being pushed by the incumbents. And so it's not reaching the audience, it's not reaching the real investor.
Well, how much does regulatory play into that? Oftentimes, people don't realize how much regulatory is holding back innovation because you must convince people first before you can actually build it, but you can't do that until you build something and show that it works, and then you have to convince the regulators. But where do you think regulatory fits into this?
So I think the little experience that I've had, I felt that regulators are, in our case, that regulators, SEC, they're doing a phenomenal job. We had an SEC audit recently, and you won't believe it, but the team that came in to audit us, they were very progressive. They really wanted to understand exactly, not the code, but what is going on. And they were really amazed by a lot of things that we are doing. For instance, one of the things that has been our motto from day one, we don't ask people to move their money from their existing brokerage. We manage money where it is. One other point that regulators really appreciated is a lot of digital advisors would ask you to sell your stocks because they have this set of 7 ETFs they will buy. And Joe was really front and he said that, I won't quote him, but the point was that they were appreciative of the fact that we are taking the pains to understand that, hey, there'll be tax consequences. I might be wanting to do something, but let's try to understand how can I keep these positions that have lots of tax gains and build something around it. So I felt the conversations we had with the regulators were very progressive. I think the problems are more that the incumbents are spending more money marketing than building better products.
What do you think is going to change that?
It has to come from us. It has to come from the investors demanding quality. I think, nowadays we are showered by so much online advertising, digital advertising that it's a challenge to figure out what is quality and what is not. But ultimately, progressive investors have to vote with their money, with their, what they choose to do. I think incumbents will move once they see customers moving.
And so as the innovation improves itself and as AI proves itself, we'll probably see more people moving in this direction. Where are we going to find that proof? Where do you think the first successes are going to come out that people will look at and say, yeah, that's the answer?
I think that one of the ways that I feel it will start is just by interacting with AI. So for instance, at qplum, we are the only digital advisor to have a chatbot that will soon be available on Amazon Alexa and Google Assistant, where you can start talking to our knowledge base, talking to our chatbot and asking, hey, this is what I have. If I move to qplum or if I try out qplum, how much can you save in tax optimization? Or if you start asking, what's your opinion on the payroll number that came in? People will want to understand it first, want to feel it out first, and then slowly adopting it.
When do you think the turning point will come? Are we getting very close to it, or are we still a few years out?
No, we are far from it. I think one of the things I was mentioning is how much the financial industry makes, like $1.2 trillion in fees. They do that by hiding what is quality. And I'm generalizing here, not every financial firm has that approach, but I meant over time, I think education has not been a focus of the industry. So we are far from a turning point where people understand what is good quality and stuff. I think it'll take genuine effort and genuine people talking to each other and people chatting on Facebook groups, etc., about information or misinformation. It'll take some time. For instance, we were talking to some of our investors and prospective investors, and very few people knew that when you're moving to another advisor, you actually don't have to sell your stocks. Most people thought that, they would have their own portfolio. Do I even have the option of keeping my current securities? You and I might take that for granted, but I think investor education will take some time.
Well, in the last few minutes we have here in the interview, what else should we cover that we haven't so far?
I think that the main aspect I would try to tell people is that a lot of our life goals are kind of intertwined: health, education, retirement readiness, what we do with our money. It's all about, making short-term decisions that have a long-term positive impact. And I see a future in which qplum or otherwise, these decisions are being made together. I think similarly in the family office space, a lot of the goals that one has are intertwined, including the family office staying together. I think we need to sort of move towards a more holistic approach to decision making, and we should use AI where it makes sense, where it can make our job easier.
Great. What's the best way for the audience to get back in touch with you?
So you could reach me on LinkedIn. My handle is Gaurav Chak.
All right. We'll put that in the show notes and let people know how to get back in touch with you. I want to thank you for taking time today and hope to have you back in the future for another episode of Investor Connect, and appreciate your sharing your information.
Thanks for having me, Hal.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.